The one thing that comes to mind from that, though, is something I've said many times on this show, which is the rest of the world owes each other dollars. In fact, they owe each other dollars more than they owe the U.S. dollars, right? So this is a Brett Johnson take. I'll get to Michael Cow in a second. So if the U.S. stops if the U.S. stops taking on all this debt, right, increasing its deficits, Lynn is right that the number of dollars in the world shrinks. But ultimately, what this also does is it causes an incredible amount of pain to the rest of the world who cannot print dollars, and they need to pay each other. They need to pay the debts to each other in dollars. So it's a situation where, yes, you can move away from the dollar, but to do so, it's going to cause an incredible amount of pain to those countries, and not at the cost, not necessarily at the cost of the U.S. in that respect. So again, could it happen? Will it happen? Eventually, yes. But I don't know if the rest of the world has the appetite for the amount of pain they will cause themselves, right? Anyway, I look forward to listening to Lynn Alden's take and see if she has an answer to that kind of fundamental situation. On to why Bitcoin hasn't pumped, or whether it will pump, or how much it will pump. I'd recommend everyone to kind of follow this gentleman here, Michael Cow. He talks about this concept that he calls the sword of inelastic demand, and specifically how it relates to Bitcoin, which is a fairly inelastic asset. In Bitcoin, you have a fixed amount of supply, basically fixed amount of supply, right? Like it's still coming out, but very slowly. And the majority of Bitcoin is held by hodlers, right? And this creates a much smaller amount of circulating supply than even the small amount that is the total supply would indicate. And thus this circulating supply is fairly inelastic in terms of like the amount of liquidity, right? The amount of demand and the amount of buying and selling of Bitcoin is pretty small. And what this means is that the price can go up a lot really quickly, but the downside, because it's a double-edged sword, is it can go down a lot as well very quickly. And the hodlers don't care one way or the other, right? They're going to hold when it goes down a lot. They're going to hold when it goes up a lot, and it creates this dynamic where this actually amplifies the price action, right? Because all the price is kind of the marginal buyer or seller, right? And so if most of the circulating supply of Bitcoin is not going to be bought or sold, then that marginal buyer or seller can really, really change the price of Bitcoin to the upside or to the downside. And I would just say, if you're in crypto, you kind of know this a bit, but also you could have a situation where if there's like a lot of market volatility, if things sell off, if people get scared, if institutions start to hedge a little bit, you can see the price go down a lot as well as going up. And that's kind of the situation you see in the oil markets as well, right? So just a word of caution, and having the price pump super high to the moon means that it also can go down really, really low.